lots of different screen sizes and colors, and I guess some cameras are better for taking movies so that it looks almost cinematic. Battery life, there's something for everyone. Is it enough, do you think, to match the reception of the last phone, the 12?
Good morning, Joe. It is a complete lineup. The phones are all being refreshed. They're the most important thing. They're about 50% of Apple's revenues. And there is something for everyone. The question is, does everyone need to upgrade their phone this year? And how many upgraders will there be this year relative to last year? There aren't that many first-time iPhone buyers. And that's ultimately the question that investors and analysts are trying to figure out is, we had such a strong cycle last year, and we had particular strength with the most expensive phones, perhaps in part because of COVID, but also because Apple's most enthusiastic upgraders, probably ran out and bought 5G phones last year. This year, the incremental functionality is a little less than last year. The phones are pretty similar to last year. And so certainly there's choice for everyone. The question ultimately is, will you have 230 or 240 million people buy new phones over the next year like they did last year? Or will that number be higher or lower? And we think the number will probably be pretty similar or maybe a little bit lower.
Maybe a little bit lower. So what would you recommend in a stock that, it's done well? Do you think it's a hold? It's add to weakness, add to positions? What are you recommending?
Yeah, our view on the stock is to hold. And while we believe Apple is a durable franchise with a powerful installed base of over, 1.5 billion users, ultimately, Apple's valuation is at the high end of its historical range. It's over the last 5 years traded between about 18 and 32 times earnings. It's about 28 or 29 times earnings. So it's at the high end of its range. And we think over the next year, revenue and EPS estimates are likely to show very limited growth. And in fact, we have earnings essentially being flat over the next year. So the combination of a relatively high valuation and flattish earnings, because comparisons are so difficult after a very strong year, we think makes it difficult to really see a catalyst for the stock here. So we think, holding a market weight, holding the shares is what we recommend for investors.
Is there any way that the watch is going to move the needle near term, or the iPads mini or otherwise?
Likely not, Joe. The watch is about 5% of revenues. The iPads are about 10% of revenues, and minis are low single digits of that, probably 2% of revenues. So they're simply not big enough categories to change the narrative.
It's all about the phone.
I'm optimistic. It's really all about the phone, just in terms of contribution to revenues.